Welcome back. The market's cooled off a little bit from the highest point, but now is attempting one more rally. So 119 points higher on the Nifty and 540 higher on the Bank Nifty. We have Basant Maheshwari now joining us on the show, author and portfolio manager at Basant Maheshwari Wealth Advisors. Basant, good morning. Thanks a lot for joining us. Your tweets went viral in May, and the one that stood out for me was when you tweeted that we tried killing the virus, ended up killing the economy instead. Is that angst over, or is that still there? Your thoughts on what has happened over the last 2-3 months.
Morning, Anuj. I think in the markets we have learned to leave the past with the past and move ahead. And what we did was, and when we say we, it doesn't include our government, it includes the entire globe. What we did was just too much panic and fear. Of course, you can't let people die, but then a death is a death, whether he dies of corona or whether he dies of poverty or hunger or whatever. So that was the only thing. And I think the Wikipedia page of the Spanish flu would have got more hits over the past 60 days than it would have over the last 100 years. Because everybody read that single page and started saying, oh, it's the Spanish flu. I mean, if there's something, my only thing was we just paid too much attention to one particular thing without understanding the repercussions. But now it's behind us. It's the past, and there's no point talking about it. But deep inside, there would always be the story that the entire globe was in a fear psychosis. And Anuj, the bottom was made, if you remember, when Donald Trump came out and said, maybe 80,000 to 140,000 Americans would die. That was the day. And people said, because before that, we thought maybe 5 million would die, maybe 3 million would die, maybe 10 million would die. But once you set an upside number, what happens in the market? A company comes out and tells you this is the worst. So the market wanted to hear the worst. And that was the day, and today is the day.
Oh, that's an interesting point. And, I take your point that, especially in market, in life, you move on. So the market's moved on now, Basant, and do you think this is the start of something big? It's no longer just a bear market rally, because everyone's calling it a bear market rally. Is it a fresh bull market that we are in right now then?
Anuj, I don't know what we call as a bull market, because 6 trillion already printed, three more in the pipeline, maybe a couple of more. All you have to see is the Dow fall 500 points and you'll get a trillion more. So I think the American government is buying each per point at the Dow with some money. They can do it. But the market will again become very localized, very narrow, very short, focused on a few companies. Like I keep saying, we have to look at the Atmanirbhar companies in India, companies that can do well in spite of the government, despite the government, in spite of corona, despite the corona. And portfolios have taken a huge churn. So when corona came, I don't think anybody was prepared for it. So when corona hit us, people sold the financials, sold the NBFCs, bought the FMCG stocks. Now, once corona is gone, you find there's no rally in the FMCG stocks. There's very little action in the pharma names. So again, people are confused. What do you do? So till those guys actually sell off the defensives and buy the financials and, the ones that were really affected, I think this rally would continue. But on a very broad scale, I think the Nifty doesn't tell you the real pain. The real pain is somewhere. We will never know, because 29% of India's GDP comes from MSMEs. Who's going to load the trucks? So when we speak to people, they say truck load karne ke liye labor hi nahi hai. So the entrepreneur, no matter how strong and how well built he is, I don't think he's going to load his own truck. So we need the workers to come back. We need and MSMEs normally are like patients on a ventilator. You remove the ventilator for 3 months, they're going to die. They're not the best of India's businesses. The best of India's business is probably an infrastructure company called an L&T. So L&T can survive any kind of an environment, not a recommendation. But deep down, even the suppliers to L&T wouldn't be able to survive. So we have to think about them. That's it.
Well, Basant, 2 points. One, I take your point on the Fed put. Every time there is a dip, you're going to get the Fed printing more. And why only the Fed? The ECB will print, the PBOC will print. And you're seeing the way the dollar is falling. It's obviously accelerated printing of notes. And separately on the MSME, actually, we did speak with the CIBIL guys, and they said, according to their data, 2 out of 3 MSMEs will sail through the lockdown. So anyway, it's a 66% positive. You can look at it positively or even negatively, that 1/3 will fall. But how do you negotiate? The reality is the prices are what they are, and they are just about probably 15% off the highs. What kind of stocks? Do you only go to these Atmanirbhar stocks? But they are very expensive.
No, one thing, you said 66% would fail through. If 34% collapse,
Yes.
which bank is going to sustain India? 34% of your advances. It's not 34% of somebody's capital.
No, Basant, wait. Don't extrapolate too much over there, because we do not know what is the banking exposure to MSME. The incremental MSME exposure is 3 lakh crore, which is being guaranteed by the government. So let's not jump the gun on being able to extrapolate, but that was CIBIL's data only on MSMEs. We have to find out what is the MSME exposure of banks, and in that who has the 66%.
No, I understand. MSMEs normally don't borrow from banks so much as they borrow from private sources. So that's their own problem, and their own problem doesn't get spilled into the economy, because MSME guy would ask his brother-in-law or his sister-in-law or his mother-in-law or father-in-law or brother or sister for some money. So that's another story. So for the moment, I think India's GDP obviously is going to take a knock. Everybody is speaking about that. I hear that commentary on your television channel, and rightfully so. We might slip 6%, 7% this year. We don't know. Next year onwards. So what's happening right now? If I'm a factory owner, I'm right now not thinking about investing at all. I'm thinking of paying salaries, paying my dues, paying my bills, and being a good corporate citizen. So if there is no investment happening right now, because today's investment creates tomorrow's GDP. So if there's no investment happening right now, I think the 6-7% GDP growth would take a while for us to come back. We would have to be satisfied with maybe 2 to 4%, a Hindu rate of growth, pun unintended. But I think that's what we should be satisfied with, because we cannot assume to hit 6, 7, 8%. I think that's a far cry.
Yeah, no, Basant, I take your point entirely. I'm not saying that we are back to the 1991 to 2014 kind of or 2017 kind of growth rate where we thought 7% was our birthright. I'm not at all saying that. And in fact, this Hindu rate of growth may come with lower inflation. The previous Hindu rate of growth had higher inflation, so the nominal GDP was still about 14%. We may have only nominal GDP of 7% for a couple of years or longer. I take your point. Therefore, I'm asking you, where are you going to invest?
So you have to buy the top 2 in every sector, and more so right now, because the bottom guys will have a lot of problems. So let me just tell you, I mean, one NBFC which we own is raising money at 4.5% CP for 30 days. Who can compete with a company that raises CP at 4.5%, 4.6, 4.7% for 30 days? So in the banking financial space, the top guys will raise cheap capital. Capital is a commodity for them. Money is a commodity, and the low-cost producer wins the game. The more the low-cost producer you become, the better for you to negotiate the trend. But this doesn't mean I'm writing an obituary on everything. This means that the money is going to shift to the best in class. There is no room now for anybody who's moderately inferior also. And that's the problem, because by the time the public actually realizes that the economic setup now favors somebody with scale and muscle power and money power, I don't think that it should be a foregone conclusion that the space for the inefficient guys is reducing with each passing day, and especially so in a lower GDP environment.
Basant, hi, good morning. This is Sonia here. So just trying to play the devil's advocate. I mean, you said the money should shift to the best in class in every sector. The best in class in the NBFC space, so to speak, were the Bajaj twins, right? Created so much wealth, great pedigree management, but it was the biggest heartbreak of 2020 with the way the stock has halved. What happened here, and does this make you lose your faith in stocks like this, or do you continue to chug along believing that some of these managements will stay afloat?
No. I mean, Bajaj Finance would do well. It's not. I mean, see, it fell 60%. An Axis Bank, an ICICI Bank fell 50%. Everything fell. So you don't lose faith in a management. You lose faith in your own thesis sometimes, that are you missing something? And that is what was happening at that time, that we always kept on checking and rechecking with ourselves with, is it something that we are missing? And finally, we got our wits together and we loaded as much as we can. We can't buy more because we've just pulled it up. We didn't sell anything. But things like that would be the first to recover. As you've seen over the last 3, 4, 5 days, the stock is up 30% and on stupendous volumes. So it means that, see, I think with all the financials and NBFCs, normally we say markets discount things in advance. But I don't think the market was discounting that the lockdown was being taken up in a hurry, and they were waiting. The moment the news came of the lockdown restrictions easing, and the best thing was the change in terminology from lockdown 5 to unlock 1. I think that was the time when people said, okay, now these companies can survive. But if you lock India up for 6 months, even the best in class won't survive. So that's a problem.
Okay, Basant, any temptation to look at, say, an SBI kind of a stock, which is now trading at all-time low in terms of valuations?
No, Anuj. I mean, from whatever I read in the newspapers and from what I see in your channel, I think these PSUs are being pushed to give more loans. And what I've learned is when you see HDFC Bank's history, again, not a recommendation, whenever the economy was in a tough spot, HDFC Bank withdrew itself from the market. Guru Finance, a stock which we owned for a long time and made a lot of money, just withdrew from the 2007 Gujarat market because the private lenders were undercutting. So you don't want to be in companies that give loans when the situation is tough. Of course, the other side to it is if nobody gives a loan, then I mean, how is the economy going to survive? But then you have to look at two angles. You have to look from the finance ministry angle and you have to look from an investor's angle. The finance ministry would obviously want, and that's the need of the hour, to give loans in these times. But as an investor, I'd like my company to be a little cautious, spend 6 months, and then start giving loans. So SBI is obviously the best in class in the PSU space. But then I think there are other things, and relatively cheaper also from what they were about 6 months back to be betting on. I wouldn't like to bet anything on the public sector banks right now. But of course, the recap is one big trade that can come through, and it has to come through today or tomorrow or whenever, I don't know.
No, that's coming only next year, looks like. We spoke with the chief economic advisor yesterday, and he said it may have to wait till next year because this year they've anyway given guarantees for a lot of loans. So the poison will also come out only next year. Basant, we're out of time, but it was a pleasure listening to you. I take your point that public sector companies are good for the country, but private sector banks are good for the investor. Take your point on that. We'll chat later. We have to take a break. We're going to come back and discuss